Amazon reported earnings which topped analysts' expectations in the first quarter, sending shares sharply higher in the after-hours session. The e-commerce giant rounds up a busy week for tech earnings stateside. Ben Kumar is an investment manager at Seven Investment Management and joins me now to discuss. Well, Amazon was a real blowout performance, $1.6 billion in net profit. That's a 43% year-on-year rise. What did you think? Could you find any cracks at all?
Amazon just keeps going and going and going, doesn't it? And it's important to remember for people, they've moved so far away from selling books online, right?
Yeah.
Amazon Web Services is a giant.
It's now 73% of net income.
Exactly, right? And a few years ago, it was maybe something people looked at the end of the statement and were like, oh, that business seems to be great. This is now what's powering Amazon. It is the engine behind so many other growth industries in the world. And the best part about that is it gets to piggyback off them. If you are a company using Amazon Web Services and your revenue is increasing, guess what? You use more of it. If you're a company and it's not going so well, Amazon doesn't care because it's got loads of other. It's like making lots of little bets on companies doing well. It's almost a venture capitalist providing back office services.
And it's almost snuck in there, hasn't it? Because no one really, like you said, no one really knew Amazon to be a cloud services business. But this is its bread and butter now, 3/4 of its business.
Absolutely. Amazon will soon, it's kind of bizarre already, soon have to move out of the consumer discretionary sector, right? You can't look at Amazon for long and say, look, it is only about selling things to people. It is now, maybe you need a new sector to describe Amazon. Maybe it's a sector all on its own.
So if we look overseas, that was one area of weakness where it saw a loss of $622 million. Do you think that it's just where Amazon was in the US several years ago, where it was loss-making and it's just that bit behind?
Yeah, I think that's a really good way to think about it. There are certain differences in markets overseas that I think Amazon is still trying to come to grips with, particularly once you move outside of Western Europe. Purchasing habits are different. Amazon's having to partner with local distributors to get the same kind of purchasing in its online offering. Amazon Web Services, there will be established competitors there. There may be language problems, but I can't see them being held back for long by simple things like geography.
Now, one of the key changes that we saw in the report was this rise in the price of its Amazon Prime offering from $99 to $119. So I think it'll be interesting to see how elastic this product is.
I suspect that demand for the product is pretty elastic. I think people like the idea of free delivery, and I'm not entirely sure that people will go back to an old pay for each delivery.
But it's a major hike. It's a 20% hike.
I don't think people think like that in their one-off expenses, which they tend to be with Amazon Prime, which is their upfront subscription. You get Prime for a year, you get the TV, you get all the deliveries. I think people still think that is incredible value for money. And arguably it is, right? Amazon Prime, they've got 100 million subscribers, and there are only 150 million households in the US. People love Amazon Prime. It's become an embedded part of what you expect. Anything longer than one-day delivery now and you get frustrated.
Now, one analyst report I saw said that it expects that Amazon will account for 50% of US e-commerce sales in 2019. Surely that's got to raise competition concerns. The antitrust regulators have got to be pricking their ears up at this point.
Yes, you would have thought so, but it has not come about through mergers, through acquisitions. It's pure natural growth. And if you dig quite deeply into the regulation on antitrust, anything that comes about through natural growth, a natural monopoly, is not something they can really do too much about.
But they have been doing a number of acquisitions, if you think of Whole Foods, for example, and there's arguably some more in the pipeline. Oh,
absolutely. On the Whole Foods side, if they were dominating the grocery market, they'd be being told to spin that off. On the web side, right, on the e-commerce side, name someone that Amazon's bought. They don't buy anyone. They just compete them out of existence. That's actually what antitrust is there to do, promote competition. And Amazon just keeps winning.
So let's switch focus to Facebook for a second. Another very, very impressive update. We saw the shares up by around 10% after the release. Do you think that the whole data privacy issue, Cambridge Analytica, all of that is finally to the past and that they can move past this? Or do you see further regulatory headwinds ahead?
I think there's going to be more scrutiny ahead. I'm not sure about the regulation. I'm not sure that the regulators are sufficiently up on what they have to do to regulate, or even what the problem is to hold Facebook back. But I don't think we've seen the full impact on the numbers. We haven't seen any real data on subscriptions in Facebook, on whether people are leaving in droves or coming back. My feeling is that for many people, Facebook is now a utility, right? It's something that is embedded, and you don't really change social network in the same way that you don't really change water supply, because you need water every single day. Lots of people need social media and the Facebook connection.
Although social media users can be fickle, can't they? They often move from platform to platform, chasing the new trend. That could potentially be a risk for Facebook.
I think it could, but think about how embedded Facebook is, right? It's very much the mature company. Now, yeah, you could see at some point in the future technology maybe launch something that beats Facebook, but it's really embedded in people's lives now. And for the younger generation, I think Facebook will have a problem about getting people, millennials who are more worried about data, more concerned about things like that, to keep using its services when there are so many others on offer. But for actually, the older generations, the baby boomers who were introduced to Facebook 10 years ago, they don't really care about data. They just use it as a way to keep in touch with some of their friends. I think that's really important.
So when a stock like this is part of an acronym, FANGs, it's clearly a very crowded trade. It's got its own acronym, it's got its own index. Do you see further upside from here from an investor perspective?
It's really tough to say there is obvious upside, right? Everyone knows that on most metrics, these companies look quite well valued, right? They're quite well bid. Equally, it's been foolish to bet against the FANG stocks, right? Again and again and again, you've seen business innovation come through and drive those prices higher. It's about having a model that you trust and that you believe in. I think for me, I think there's enough good news going on in the rest of the American economy that you can look outside the FANG stocks. But there are a lot of people out there who buy what they know, right? And they will keep buying Facebook, they'll keep buying Amazon, they'll keep buying Netflix and Google, and they'll keep being part of the indexes, and that will push their stocks higher.
So on Netflix, for example, it's up 63% year to date. Surely that pace of growth can't continue. We're not looking for 240% by the end of the year, are we?
No, that would be pretty spectacular.
Yeah.
But I think
who knows?
Netflix is somewhere where, at least compared to the three other beasts on the screen, it's smaller, right? It needs more consumer growth. It is getting it, and it also has the brilliant thing of being able to control its own product. It creates products that people want to go and see, and that keeps them coming to Netflix. It's a really interesting business model.
So Netflix's subscriber numbers were blowout, fantastic numbers. One issue is its debt, which nearly doubled last quarter to $6.5 billion, and it's looking to raise another $1.5 billion. I mean, we have to remember we're in a rising rate environment here. Could that be a concern if its costs there really ramp up?
Yeah, I think it could. So I talk about controlling their own content, but if a few of those start flopping, and people start saying, you know what, there's nothing good on Netflix anymore. That's what they must be afraid of, right? There's nothing good on Netflix anymore. Those costs are fixed, and they need to be able to service them, which means having hit programs again and again and again.
So it's quite a risky business model in a way.
It is a risky business model, right? The way that Amazon Prime takes the risk out of its business model is affix it to a giant that's doing loads of other things, and they can just kind of carry the subscription levels up or down, or make a loss, make a profit. Netflix doesn't have that luxury. It has to keep getting it right again and again and again. But the prize is so big, right? The prize of being the distributor of content that everyone goes to is absolutely what they're fighting for.
Now, taking a step back, there's this race to $1 trillion. Which tech company do you think will be the first one to reach that market cap?
I think it's probably going to be Amazon. But I don't particularly have any reason other than it looks like it's got a little bit more momentum. Which company do I think is most likely to stay at $1 trillion for longest? I think Alphabet's probably a better bet. I think they are more entrenched in some areas. Amazon Web Services, Google are coming for. And when they come for it, Amazon will suddenly find that those growth numbers are harder to sustain. So I can see both Alphabet and Amazon getting there. I can see Alphabet having a little bit more staying power, actually.
All right, Ben, we've run out of time, but thanks so much for coming in. That was Ben Kumar, investment manager at 7 Investment Management, talking us through the tech earnings there. I'm Victoria Scholar. Thanks so much for watching IGTV, and we'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis, and expert commentary.